Bandit, Anne-Marie and Rockabye on BBC Radio London.
Savvy Savings.
So, for Savvy Savings this afternoon, I really wanted to look at housing, but more particularly mortgages. Just over a week ago, the Bank of England confirmed it would be reducing interest rates from 4.5% to 4.25%, with actually, there were some hints there of more cuts that could follow. What does that mean then if you've got a mortgage, if you want to get on the property ladder? Really delighted to say that I'm joined live in the studio with Sarah Tucker, founder and CEO of The Mortgage Mum. Great to have you here, Sarah.
Thank you for having me. Hi.
I suspect it's been a busy week with all of this news that's come out. What has it been like?
It has been extremely busy. Busier over the weekend because we had the 100% mortgage hit the market on Friday morning.
Yes.
And I knew there was a big gap. I knew there was a lot of people that couldn't get on the housing ladder without a deposit. I did not realise the extent of the gap. There are so many people that have hope now, which is amazing.
Let's unpack that for any of our listeners who they've seen like some of the headlines. Give us a bit of details of what's taken place over this weekend around the 100% mortgages.
Yes. So previously, there were different schemes and there are still different schemes out there that give you potentially 100% mortgage, but with the help of your mum and dad.
Right. Help a bank of mum and dad.
The bank of mum and dad, generally. Or there was a rent scheme, but we'll talk about that in a moment. But April mortgages come into the market on Friday, launching a genuine 100% mortgage for first-time buyers and home movers with a minimum income of £24,000, which is really accessible to people, and with a brand new concept of a 10-year fixed rate around it. So they're a Dutch lender, they're one of the top 5 Dutch lenders, and this is really normal for them. So they don't really subscribe to the whole 2-year, 5-year fixed rate, putting your property on the line and hedging the market and hoping for the best, hoping the rates are on your side.
Sure.
They're very much more about longer term and giving more flexibility. So they're giving a 10-year fixed rate, but you can make as many overpayments as you want to. And that's really why the regulator has said yes, because there's lots of healthy money management that goes with this product. So what I mean by that is you can't get access to it unless you've been through an advisor.
Right.
And there's only a small pool of us that can get you the product. Mm-hmm. And we have been trained by April in really educating on this product so that you're not just giving people 100% mortgages without really wrapping advice around it.
Because in my head, I just remember the days of the recession, and I know we shouldn't go back to those days, but there'll be some of our listeners who'll be thinking, I remember just how detrimental 100% mortgages were, especially around that period of time, how it affected the market. So how is this different to that time?
I think there are going to be people that worry, and I've been really diving into that. That's my job, to really understand. I think the biggest thing people talk about is negative equity. What if the property market and the value of property goes down and I've secured a 100% mortgage, which we saw. I was one of those people.
Okay.
I got a 100% mortgage, got on the property ladder in 2008, and then the credit crunch happened.
Right.
Now I rode it out. I stayed in the property until it picked up later on. So I've sort of lived through it and I understand. I think the difference with this is you can make those overpayments over 10 years. You're going to be taking a lot of the capital off.
Sure.
So I don't feel as concerned about that as I know people will be. And it is very, very different. I mean, back in 2008, these were packaged, lots of adverse credit. Mortgages were packaged into things where you couldn't tell that they were in them and sold on. So there was a lot more depth to what happened in the credit crunch. It wasn't just the 100% mortgages.
See.
But I understand that there will be people that are uncomfortable with it. I think I've really dived into this, and when I found out about it, I was the same. I thought, is this a good idea?
Is it a good idea or not?
But actually, honestly, I feel really comfortable about it. I wouldn't talk about it otherwise.
Yeah, of course. And it's interesting that fact that you had that lived experience yourself, which will really benefit people, especially because it can be a really daunting time if you're getting onto the property ladder for the first time, buying your first house, but then even moving, for all of us, if you are a homeowner, whatever that kind of journey is for you, it's never as smooth sailing, I think, as we'd like it to be. Can we just kind of reflect upon the news as well I mentioned earlier on about the Bank of England confirming they would reduce interest rates. What's the key takeaways from the 4.5% to the 4.25%, with the caveat there could be more cuts to follow?
Okay, I mean, I think the key takeaway is the Bank of England are trying to balance inflation. Trump's tariffs are a big part of this.
Okay.
So we're not surprised that they did it. The swap rates have reacted rather positively to what's been happening, and by that I mean they've been coming down.
Okay.
Now, lots of people think the Bank of England base rate means the fixed rate market is generally going to follow, but they follow the swap rates, which is what the market thinks the market will do.
Mm-hmm.
They've been coming down, so the Bank of England have reacted to that, and as you've said, they are looking to potentially make more cuts in the next year. I think the key thing there is if you're on a tracker rate or a variable rate mortgage, that's going to come down straight away. But I think it indicates that the mortgage market in particular is much more affordable. We're seeing the fixed rates coming down.
Okay.
So there seems to be a lot of positivity, dare I say it, around the mortgage market and the property market. And one of the main reasons for that is we are looking like a very good investment now, particularly for foreign investors. They are looking at the UK property market. They're sort of thinking that it is a good place to put their money and invest. And that allows people like April Mortgages, for example, to be able to offer products like this because they will get funding for them.
Okay.
So it all kind of spins around
It comes
other.
around. I mean, I'm just thinking of 12 months ago and where we were at and where we were discussing mortgages and what it was like. Is there anything that can be done to get, let's say, a more preferential rate then, do you think?
The more deposit you put down, the better the rate, always.
Okay,
that
sure.
hasn't changed.
Yeah.
So although we're sitting here talking about 100% mortgages, no matter what, the more deposit you save, the more you can put down, the better your rate is going to be.
Right.
And the better your credit rating is going to be, and this is all about healthy money management, the more likely you are to get one of the better rates on the market. I think the key for me is really getting across to people the variety of options that they have now. This isn't just a case of punching into a calculator, I earn this, roughly I can get that, I can probably Google the answer.
Okay.
There is so much innovation out there. There are so many products. I mean, we are struggling to keep up.
Really?
Yeah, because there's so many different ideas to try and help people. So you really do need to get advice is the biggest message.
It's quite something, though, because often we hear, extensively about the housing market in London and how especially young London families are being priced out. If you're on the rental market, how difficult it is to move from renting to then buying your own property. And of course, if you are single living in London, for a lot of people, it's just a washed out dream, this aspiration to buy your own home in London.
Yes.
Like, how feasible is that with all of this context you're giving around mortgages and the possible good news, if you will?
I think London is it's almost its own economy when it comes to the property market, honestly.
Yeah.
For example, a lot of the properties that's going to be affordable to London people is going to be flats, and that 100% mortgage isn't available on flats. So I'm not sitting here saying all the answers are there for people in London, because realistically the average property price is so much higher in London. I read statistics the other day that the average deposit is 60,000, but in London it's 120,000 pounds.
So it's nearly double.
It's nearly double.
Gosh.
And so anything that we're talking about today, you've got to almost halve the chances for someone in London.
Are Londoners being penalised? Is this more of a postcode lottery around if you can afford to buy a home comparatively to living in London and outside of it?
Yeah, I think to be honest, you've got to be at a certain calibre to be able to afford to buy in London. And a lot of people are saying, well, with the flexibility of working and people not really working in London full time necessarily, or not being required to, we are finding a lot of people coming out into a commutable area that's much more affordable, which isn't what everybody wants,
But isn't that at a real detriment to Londoners and London life?
Yes.
When actually you're only working in London, you're not living in London.
Yeah, and I know people that live and work in London love it. They are really happy here. And then it comes into that conversation of, well, is it worth it? Do I want to buy a property that much? And that opens up a whole other debate for people as to, the value that we put in Britain and in England about owning your own property isn't shared by everybody, and certainly in London I think it's less of a priority, honestly.
Really?
For people that live in London that, like you say, don't think they can afford it, they have to make that choice, and some of them will choose to rent as long as the rent isn't increasing, because that happens as well. That's been happening over the last few years. If they can make it work, but it's a real personal choice, like everything in the mortgage market, for example. Everything comes down to the personal choice of the people.
Gosh, it sounds dire for Londoners, though, I must say, Sarah.
I wish I could come in here and say something, but I have to be realistic.
No, absolutely.
I'm not going to sit here and sugarcoat that it's easy. It's definitely getting better in our market, but specifically for London, the biggest issue is the price of property in London and the affordability that is needed to be able to afford to buy them.
And so with that caveat in mind, right, as you've kind of really put out clearly there, are there mortgage accounts which offer better rates that could possibly help? As you've just mentioned, you're looking at double the deposit if you're looking to buy in London, whether it's your home or even a flat for that matter. I suspect for especially young working families, they will be looking for that support from parents, grandparents to be able to add in. But are there mortgage accounts which offer better rates for people to be considering or looking at even?
For London, for people that live in London, there isn't specific London-based mortgages. No, there are always different rules for affordability or deposit requirements. So there'll be a deposit requirement and then a London deposit requirement, for example.
Elaborate on that.
Well, I can't really because they're specific to each lender. But I would say, for example, I know the Help to Buy scheme isn't here, but they would give you X number more deposit if you were in London. Okay. Obviously, the Help to Buy is something as an industry we're really pushing for to come back because it really did help. If you had 40% of your deposit interest free for 5 years, it has actually driven 30,000 first-time buyers out of the market by not having that Help to Buy scheme. But of course, the government have quite a lot on their shoulders right now in terms of budget, and that was a big part of the decision they made to retract it.
What would you want to say to the other side of the coin, to the parents, grandparents, those that maybe for whatever reason that they have that generational wealth that will then be something they can pass down to children? What's the advice? Because sometimes we always kind of say, bank of mum and dad, but they may not even know. Well, how should I be supporting my child in buying their first home?
There's lots of different ways they can help, and it's really good to give that airtime. Obviously, the most traditional way is to gift a deposit and not expect it back, because it's very different if it's gifted or loaned. And you have to be able to confirm that you don't want the money back. That's the most traditional, but there are other ways now where you can help your children get on the property ladder and you get your money back. So, for example, there's the family deposit scheme, and you basically would put the essential deposit into a bank account. You can't touch it for 5 years. You will earn interest on it, and after 5 years you'll get that money back, but that will act as the deposit for your child. So that's an example of something that can work really well, where both parties get what they're looking for. And for some people it's the affordability as well that they're seeking. So there's NatWest have just done a family-backed mortgage, and there's others that do a similar scheme whereby you can have your parents on the mortgage, but you own the property. They don't own the property. And eventually...
Well, how does that work?
So it's called joint borrower, sole proprietor. So you're all on the mortgage application, but only the person that wants to be on the deeds is on the deeds, and everybody else is helping to boost your affordability. And there's quite a few products like that where family and now friends can help boost your affordability, but they don't own the property.
Would that then impact them if they want to buy a property as well, though?
Yes, so they'd have to be able to afford to be affordable on both mortgages.
Got it.
Which is part of the advice. We have to look at that because it can be restrictive.
Sure.
And in the past, we had the issue that the parents are older. So because they're older, we can only stretch the mortgage term to a certain age at the end.
Of course, yes.
And of course, if they're 70 and we can only get to age 80, that's a 10-year mortgage to try and have as affordability.
Yeah.
Now we're seeing more innovation where actually you can have some of the mortgage on a longer term that's allocated to the younger person and some on the shorter term, so it just makes it a little bit more affordable.
It kind of gives that breathing space, it feels like, actually, Sarah.
And this is what I mean. there's so many solutions. You almost just need to throw your situation out
Got
there.
it. Just say,
and
this
let
is where
someone
I'm
put
at.
it together as a jigsaw.
It's absolutely. Whereas in the past, you're right. I mean, I remember the days when I graduated from university and I just put in my bank account, oh, this is what my graduate job, this is how much I'm looking to earn.
Yeah.
This will probably be what I'll save for a deposit. And then like, oh, this was the number that would come up as to what you could buy. Interesting how times have changed.
Yes.
But that flexibility is needed, I guess, especially where we are stretching as much as we can to try and buy, even in London.
Yes.
Sarah, if anyone wants more details for you for the work that you do, the Mortgage Mum, give me information, please.
Okay, so we're a team of 30 women all over the country and rapidly growing. You can reach us on our website or on Instagram, www.themortgagemum.co.uk, and we're all over the country, so we can help face-to-face or over the phone or the internet.
It's been amazing having you here. What a wealth of knowledge you have. Thanks for joining me this afternoon. So it's themortgagemum.co.uk. What a brilliant conversation for Savvy Savings this afternoon. I just know Sarah will be back in the future as we delve more into the ever-changing details of mortgages.